What's up, guys? It's Rob here, and today we've got to talk about what is battering the market. All right, we are seeing stocks red left and right. We're seeing cryptos being very red. A whole bunch of assets are moving down. Pretty much everything is down, right? Gold, silver, stocks, crypto, everything is moving down. We've got to talk about what's going on and what I think about the whole situation, right? I don't think this is going to be too persistent of a thing. I think we're probably going to start seeing some better stuff coming out soon. But we will talk about what's moving stocks down right now. So you can see the S&P has obviously been feeling quite a bit of pain, and cryptos have been feeling quite a bit of pain as well. It's pretty much all red here. I mean, there's not even a green crypto over the past 24 hours that you can really see, other than STEPN coin. So that's pretty much the only one. Now, we've got a couple of things going on that are causing stocks to be red. First off, bad earnings are really dragging stocks down right now, right? There's a couple of reasons why we're seeing bad earnings, but they have been hammering a lot of companies. The Dow has fallen 700 points in its worst day of April and is heading for a fourth straight weekly loss on this bad earnings news, right? HCA Healthcare down 18%, DaVita down 7%, Dexcom down 5%, Verizon down 6%, Gap down 19%, and Snap down 1.7%. So a lot of stocks have just been plummeting on bad earnings news. Now, why have stocks been having bad earnings, right? What's been going on to actually cause these bad earnings? There are a couple of things that have been causing bad earnings for stocks and have been putting a bit of a squeeze on consumers as well. First off, energy prices, right? Oil prices specifically have just been, ever since 2022 started, ramping up and up and up and up. Even before the Russia-Ukraine situation, you can see that oil prices were on a very sharp incline right here when we were recording results for the earnings that are being released now, right? Especially as March hit, earnings or the price of oil just skyrocketed, right? As March hit, we saw oil prices skyrocket, and that's certainly going to hurt the bottom line for a lot of companies, right? Companies are big consumers of energy. They use them to transport their products. They use them to make their products. And when energy prices go up, that's definitely going to take a bit of a slice out of their bottom line, right? They're going to be paying a lot more to just continue the operation of their company. And that's an unfortunate circumstance, but that is probably going to be resolved hopefully in the next couple of months. I mean, it really depends on what goes on in Russia and Ukraine and how quickly people can transfer to alternative energy sources. I know they're trying to in Europe, and that should hopefully quell a lot of the supply or a lot of the demand that we have for oil. And hopefully we'll find some way to get some more supply coming on, right? Obviously, when the price of oil moves up so quickly, there's going to be a lot of money to be made for whoever can figure out how to get a lot more oil on the market. So there are people who are probably working on this, and people who are probably going to make a lot of money off of this higher priced oil. And hopefully the laws of supply and demand will react relatively well together. We'll end up seeing the price of oil come down as those people end up figuring out how to get more oil on the markets and make some more money for themselves. So hopefully that will be the case. So energy, over the long term, I'm not too worried about it, right? I think that energy prices are probably going to start coming back down. Obviously, they were moving up before the whole Russia-Ukraine situation, as the prices of pretty much everything were. Inflation is the double-edged sword, right? We're seeing this hit businesses twice. We're seeing inflation not just hit businesses in the sense that they have to pay more for goods, and a lot more for goods than what they're actually charging consumers. If you look at the producer price inflation, we're seeing producers are paying 11.2% more than they were a year ago for goods, and they're only charging consumers 8.5% more. So that is a hit that producers are taking, right? Producers are essentially taking a 3% just about hit regarding inflation. They're paying more for goods, and they're not actually charging more for goods. And we all know that these inflation numbers are not actually what people typically experience inflation-wise, right? If you're buying a house, you're obviously paying a whole lot more than 8.5% than you were a year ago. That goes for businesses that are purchasing plants as well, right? If businesses have to buy property, it's still going to cost them more. There are a lot of costs that aren't actually factored into the CPI and the PPI, and businesses are undergoing those as well. I mean, Tesla even says that inflation is underreported, right? Elon Musk said that just yesterday. He said that the prices of a lot of his inputs for cars are up 20 to 30%, and that is certainly not in line with the 8.5% CPI or even the 11.2% PPI. So businesses are suffering a bit from this inflation. Now, the inflation is probably going to be fairly persistent, right? I do expect that we'll see, not massive deflation in the near future, but what people are doing in reaction to this big inflation doesn't make too much sense to me, right? It does not make too much sense for me to see people selling out of their stocks, selling out of their crypto, selling out of their assets like gold and silver in an attempt to get into cash during a high inflationary period, because cash is what's actually being inflated away, right? That's what's actually dropping in value. And so to sell your assets, to sell your stocks, crypto, gold, silver, real estate, whatever it is, because you're worried about inflation, because inflation is hurting the economy, you're actually just selling into cash, and it's probably going to lose even more value than the other assets, right? That's just my opinion. It doesn't make too much sense to me to sell into cash when you're worried about inflation, when inflation is actually what's hurting you. So that's not something that I would intend on doing. Now, that's one side of the inflation coin. The other side of the inflation coin is obviously the CPI is up, right? Consumers are paying a lot more for goods, and they're probably noticing this. They might be cutting back on their spending. They might not be spending as much because they noticed that inflation is up, that things are costing a lot more. And some things, let's just be honest, do not seem like that good of a deal anymore when you have to pay 10, 20, 30% more for some stuff, right? It depends on the category that you're talking about, but people are probably spending quite a bit less because they've noticed prices have skyrocketed, right? So inflation, double-edged sword, it is unfortunately contributing to bad earnings, but at the end of the day, it is companies' jobs to figure out how to make money, right? How to make money in an inflationary environment or a non-inflationary environment. So they're going to figure this out one way or another, right? They're eventually going to catch up the PPI, I believe, with the CPI, right? The CPI will eventually rise. It's lagging the PPI, right? Companies need some time to implement these price increases, but we'll probably see them charging more, unfortunately. And at the end of the day, it's probably going to have a somewhat negative impact on earnings, but over the long term, things will hopefully stabilize and they'll be able to figure that out, right? Hopefully, inflation won't be affecting companies' earnings for all that long. Right now, though, we are seeing stock prices move down. And so to be selling after stock prices have moved down in reaction to bad earnings, we've already priced in the bad earnings, right? We've already priced in the inflation that's causing a lot of these bad earnings, and it doesn't make too much sense to me to be selling after the fact, right? So I'm not too concerned with that. Now, the third thing that is causing bad earnings, right, and potentially just a tough economic environment is less stimulus, right? Over the past couple of years, we have gotten pretty used to seeing a lot of stimulus coming into the country, and you can actually see it in the personal savings rate, right? Every big spike that we saw in the personal savings rate was actually when we got a stimulus check, right here in April of 2020, in January of 2021, and in March of 2021. We saw stimulus checks, right? And the bigger the spike up, the bigger the stimulus check. So people essentially have been living off of stimulus for quite a while. Now, we've actually just gotten to a point where we've dipped below, over the past couple of months, the normal savings rate. The savings rate is typically around 7.6, 7.4, basically above 7% the majority of the time. Looking back to 2015, we've seen a somewhat steady savings rate around 7%. Sometimes it moves up to 8 or 9. But just recently, January of 2022 and February of 2022, we had a massive decrease in the savings rate. We moved down to 6.1% and 6.3%. So people are saving a whole bunch less. The stimulus money, you can see, it certainly boosted people's savings rates up for a while. People held on to some of that money and have slowly been spending it, but that has slowly worn down, and we've actually gotten below normal, right? People have gotten used to spending a certain amount of money. And as inflation has hit and as those stimulus checks have dried up, right, those stimulus savings that people got have dried up, there's actually a lot less money that people have now saved up to be spending at all. So people, unfortunately, over the past couple of months have not had as much money due to lack of stimulus, right? That's something that people have gotten used to having over the past couple of years. You know, there were stimulus checks coming out every couple of months and a whole bunch of stimulus programs, right? Not just stimulus checks. But that's dried up, it looks like, for most people. Most people have spent that money at this point, and that's no longer factoring in to how much people are spending at businesses, right? There's no longer that built-up savings that people have that they can then spend at businesses. So we're looking at a situation where, unfortunately, for businesses, big portion of their revenue might have been coming from additional stimulus, right? The government printed all this money, people had it to spend, and those businesses aren't getting that money anymore, right? So earnings are not looking all that great this quarter. Now, will that be a persistent threat? No, I don't think that will be, right? Obviously, people will get used to the fact that there's no more stimulus coming in, and businesses will adjust, right? We've seen some price adjustments in businesses as the earnings have come out, as they've been a little bit lower. Am I going to be selling stocks now that they've already fallen? Probably not, right? I think that we'll continue along the trajectory that we've been on for the past many, many years. And if you take a look at the chart, we can pull it up right here. Over the past all time, the S&P has been looking pretty darn good, right? Typically, you tend to see stocks doing fairly well. Of course, there are periods of time where you see some volatility, In more recent years, those have become less and less frequent. I don't think that we're going to be in a huge recession anytime soon. That's just my opinion. I think that things could get tough for the dollar, but I don't want to be selling stocks and assets like gold, silver, crypto just to get into the dollar, which I think is probably, if things were going to go poorly, the dollar's probably what's going to be suffering the most. So that's just my opinion on things. It's obviously not financial advice. I'm just letting you guys know my opinion. And if you appreciate that, feel free to subscribe to the channel. And other than that, guys, have a great day. I'll see you in the next one. Bye.